What's up guys, this is Max from Crypto Potato, and today we'll be taking a look at Huobi Futures platform. Founded all the way back in 2013, Huobi Group is one of the leading blockchain companies in the world. It's safe to say that the company has come a long way since then, and it's currently offering a variety of services for its wide user base. Employing people globally, Huobi offers a myriad of crypto-related services including digital asset trading, wallet, mining pool, incubation, research, proprietary investment, and so forth. Cryptocurrency trading has surged in interest throughout the past few years, and exchanges such as Huobi have worked hard to expand their offerings. Derivatives products, apart from traditional spot trading, have exploded in interest, and Huobi is doing its best to accommodate. Among its popular trading products are the futures, perpetual swaps, and options platform. In this guide, we will take a closer look at how these tools operate and provide a step-by-step explanation of how to use them. Now, let's see how to register. The process is fairly simple. There is no mandatory Know Your Customer procedure for spot trading, but if you want to start using the derivatives platform, the ID verification is obligatory. All that is needed here is an email address that has to be verified through a verification code later on. Once you have your account opened, it's highly recommended to take a few additional security steps. First, it's important to enable the two-factor authentication using the Google Authenticator app. In addition, Huobi has taken an extra few steps that protect your account in the event of it being hacked, such as email verification codes, phone verification codes, a designated fund password to ensure flat asset security, and so forth. If you want to trade on the derivatives platform, you'd have to go through an additional ID verification step, which requires you to input your names, a government-issued passport, driving license, or ID number, and upload a picture of it. We've completed all of these steps, and in our experience, the process was seamless, and the KYC took no more than a few minutes to be completed and approved by Huobi's team. Now that you have your account set up, it's time to load it with some funds. Depositing is fairly straightforward, and users can choose between a myriad of cryptocurrencies including Bitcoin, USDT, and others. From the top navigation bar, you need to hover over Balances and choose the account you wish to fund. Regardless of where you deposit initially, you can easily transfer the funds between accounts. It's instant. After you select the cryptocurrency you want to deposit, all you need to do is click on the Deposit button. In any case, regardless of the cryptocurrency you deposit, make sure to correctly select the transaction network. In our case, we used USDT on Ethereum's ERC20 standard. From here, you can make quick, fee-free transfers between the accounts and fund your derivatives ones. All you need to do is open the account, select the currency that you want to transfer, specify the amount, and confirm the operation. Once this is done, you are ready to begin using the different derivatives products. Let's have a look at them now. How to trade Bitcoin options. Options contracts are one of the most popular derivatives used constantly in traditional finance. Lately, there's a huge demand for cryptocurrency options as well. Huobi Futures has a dedicated options platform where currently users can trade both Bitcoin and Ethereum options. In this guide, we're going to be focusing only on Bitcoin. By definition, an options contract represents an agreement between two parties to facilitate a transaction on the underlying asset. In this case, we're using Bitcoin to USDT index at a present price, known as the strike price, prior to the expiration date. Purchasing a call option means that the buyer has the right to buy Bitcoin corresponding to the contract face value at the strike point. On the other hand, a put option means that the buyer has the right to sell Bitcoin under the same conditions. In the below example, we will show you how to buy a call contract on Bitcoin and all the necessary details. First, when you land on the Huobi options trading platform, this is what you're going to see. In the top left corner is where you select the type of Bitcoin options contract you want to trade with. For this example, we'll be using the weekly BTC contract with a strike price of $10,000 and expiration on October 30th and a leverage of 4 times. Below is the board where you can monitor the prices for the different contracts based on strike price factor. As can be seen in this example, our contract costs around $3,000 to buy. Huobi uses a system where traders can open positions based on contracts, where one BTC options contract equals 0.001 BTC, or about $10 at current rates. Unlike other exchanges, users can join options trading on Huobi with fairly low entry barriers. Now, let's see how to open a call position, as we assume the price of Bitcoin will close above the strike price of $10,000 on October 30th. From the order menu, we've selected a price that we want to buy the contract at. It's $3,090, and the number of contracts that we want to purchase, in this case, its maximum amount of 10 contracts, will be about $100. Now, keep in mind that if you set a price which is lower than the first seller, the order won't get filled, but it will be added to the order book waiting for a seller. But if you want your order to get executed immediately, set a limit order above the lowest sell order that can be seen here. Also, keep in mind that in liquid markets like what we see here, you might pay a huge premium on the actual price. As soon as we hit the buy call button, our limit order will be executed, and we will have 10 contracts at $10 each, giving us the right to buy Bitcoin at $10,000, the strike price, when the contract expires on October 30th. If the price of Bitcoin is above $10,000, we will realize a profit. If it's below that, we will lose the options premium. As soon as the order is filled, you will be able to monitor its performance and close it from here. Now, you can select the exact price you want to close the contracts at, or alternatively, you can use the flash close option, which automatically matches your contracts with the order book and sells them at the best available rates. Now, in this example, we've only shown how to buy a call option for Bitcoin, but users can also buy put options and they can sell contracts as well. How to trade Bitcoin futures. Okay, moving on. Bitcoin futures are also available on Huobi Futures. Here, users can buy these contracts and speculate on whether or not the price of Bitcoin will be above or below the current price on a preset date. This is how the trading interface looks like. From the left side, users can choose the over 60 kinds of cryptocurrencies and the available futures contracts. For Bitcoin, Huobi offers weekly, bi-weekly, quarterly, and bi-quarterly contracts and supports leverage up to 125 times. Basically, if you believe that the price of Bitcoin will be higher than the current price at the expiration date of a given contract, you should open a long buy position. If you think it's going to be lower, you should open a short position, sell position. How to trade Bitcoin perpetual swaps. Perpetual swaps are probably the most popular cryptocurrency derivatives instrument. They're like traditional futures with the exception that they don't have an expiration date. In other words, traders can be open and close them whenever they want to. This is how the trading interface looks. It's worth noting that Huobi even offers USDT to USD perpetual swaps with leverage of 1 to 1,000 times, becoming the industry pioneer in USDT derivatives. Besides for the non-stable coins, traders can use perpetual swaps with extremely high leverage of up to 125 times for BTC swaps and 75 times for other swaps. In other words, you can open a position worth 125 times the amount you have in your account. While this brings opportunity for big profits, please be aware that it's also extremely risky, as the slightest movement in the opposite direction of your position can liquidate it, causing you to lose your capital. Using high leverage is definitely not recommended for inexperienced traders. Huobi's customer support. Huobi's overall customer support is very good. From our experience, the team is very responsive and easy to communicate with. Elsewhere, the KYC verification process is particularly quick. After we submitted the documents needed for the identity verification, the team took no more than a few minutes to have them checked and approve the account for trading. But is it safe to trade on Huobi Futures? Huobi is one of the largest cryptocurrency exchanges in the world. It's an established company with thousands of employees. While it's never recommended to keep a large amount of crypto in an exchange, Huobi is regarded as being very safe to use. The team has also added a myriad of additional security features that users can opt into further protect their accounts. Of course, you should always be aware of scam artists and phishing attacks. It's also important to consider the trading fees. When it comes to the trading fees, Huobi has various fees on their platform, so let's take a look at a detailed breakdown for individual traders. In this example, we see futures trading fees. Next is Huobi's perpetual swaps trading fees. And finally, Huobi's options trading fees. It's also worth mentioning that Huobi Futures also provides VIP sharing program and market maker program to lower big users' switching costs to Huobi. For example, Huobi options maker fee rebate is as high as 0.003 USDT per contract. In conclusion, Huobi is one of the most reputable exchanges out there, and they live up to the statements. The customer support is quick and easy to communicate with. The exchange offers a range of different tools to accommodate the needs of various traders. Their Bitcoin options trading platform is convenient, rather intuitive, and easy to work with. There's a range of different contracts with various leverage options and expiration dates. And that is it for this video. Thank you so much for watching. If you want to see more content like this, please give a like to this video and subscribe to our channel. Thanks.